Okay, hello everyone. Thanks for logging into this podcast. I have Chinmoy Mishra here with me. Chinmoy is the founder and CEO of HooLiv, which is a startup that is aiming to create a modern form of co-living, where you're not just sharing like a living space, but sharing a set of interests as well with the people that you're living with. And Chinmoy is also a serial entrepreneur and previously has had a successful exit from AllizHealth. Chinmoy, thanks so much for doing this with us. I think a lot of questions around entrepreneurship and around navigating the world of entrepreneurship with your ideas, with your execution, and your own sort of journey we want to highlight in this podcast. So it'll be super useful for our young listeners. So thank you so much for doing this with us.
Sure. Thank you. Thank you so much, Pawan, for having me here today. It's a pleasure. And yeah, I look forward to the chat with you and yep, contributing in any way that I could. So thank you so much.
Yeah, awesome. Let's get into the questions. And the first thing we wanted to understand is when we were doing our research, we found that HooLiv started off as a solution for the elderly, but then you pivoted more towards like student co-living and young co-living for youngsters, right? So pivot becomes like a very important part for a lot of entrepreneurs, especially very early on, and they realize that the market or the problem sort of lies elsewhere, and maybe their talents also lie elsewhere in trying to solve that problem, right? So from your experience when it comes to pivoting and changing direction, what would you say? How much of it would you say is about, or rather, how fast do you need to be with doing a quick market research when you need to pivot and understand, okay, this is where the problem lies? And the second thing is understanding or balancing your own instincts as an entrepreneur and what you feel versus data and what that is showing, right? So, sort of like the age-old question. So first,
Yeah.
let's talk about doing quick market research and understanding the reason behind the pivot.
Yeah. Certainly, very interesting, Pawan. So yes, when we were looking at what to start next after we exited from our previous venture, so we personally, I'm very bullish on the entire shared economy concept. I think shared economy, whether it is an Uber, Ola, Airbnb, they're here to stay and grow. And also, I believe that gradually we'll see that more and more organizations are built democratically rather than being one large monolithic organization and so on. So I'm a very big kind of evangelist for shared economy. So when we looked at this segment, Pawan, shared housing is something that struck a chord with us. And we could easily bifurcate shared housing into three segments. You have the student housing, you have work housing for executives or working professionals, and then you have the senior living. So senior living, Pawan, why the reason why we were kind of very keen on that is because of our previous venture also, where we used to deal a lot and we were completely in the health tech space. So we used to do a lot of preventive checkups. We were into elderly care management, condition management, and so on. So we had kind of soft corner for that, you could say. So when it came to the elderly care housing, we definitely started with that in a very serious note. And as you rightly mentioned, we started with the whole market research thing. And what we realized that was if you talk about senior housing in India, there were two extremes. You have either the poorly run nursing homes, or at the other end, you have the high-end Ambivalley kind of thing. And there was nothing in between. There are some options now, like Manipal, I think, has come up with something. Max hospitals have come up with senior care and so on, but a very far and few. The market was very open and very blue ocean. So we got started into that. We did a lot of market research. Definitely, the potential of the market is huge. The market sizes and all were right, checking all the right boxes and so on. But the reason we stopped ourselves from getting much deeper into it or going ahead with it is because when it came to the psychological aspects of it, or the whole factor that in India, sending our parents or grandparents to any such place, whether it is for a few hours, because our concept was more on the daycare for elderly rather than an elderly care living, there is still a social taboo around it.
Yeah.
Not so comfortable doing it for various reasons, maybe just the societal structure that we have and so on. So that kind of prohibited us. We felt that maybe we are slightly ahead of time for an Indian market. And so when we kind of looked at the whole data from that lens, I think that gave us a much clearer perspective that look, while the data might suggest that this is an amazing space to get into, there are certain other market forces which might speak otherwise. And that helped us that kind of pulled us back, and we kind of took it back to the board and we said, look, let's park it for the time being. And let's wait for maybe 5-6 years when this becomes slightly more regular phenomenon in India. That's maybe the time to get into it. Because the challenge with these kind of initiatives, Pawan, is that on a tech, if you're offering something which is completely technology related, you can still get into it and try to build a market, you know. Whereas if you're looking at these kind of businesses like a senior housing or a student housing and so on, which are slightly capex they're high capex and there is capital intensive. um, you are, unless you have unlimited pockets, you're not really in a position to build a market. So you have to wait for the market to be at the right point, and then you enter. So the timing really matters when it comes to capital intensive businesses. Whereas in a tech business, hey, you are building your own market. So that's the difference, and that kind of helped us, you could say, pivot in a way, Pawan. And then we seriously started looking at the other two segments. And when we looked at the executive housing and the student segment is something that appealed to much more, or we could relate to it much more, simply because as students, all of us has been through phases in our life where we have stayed in some of those poorly run student hostels, dorms, PGs, where we frequently complained about the lack of infrastructure, the poor hygiene, poor security, no privacy, and so on. And not surprisingly, those kind of challenges still remain. So that is something that got us attracted towards it. We said, hey, look, we could relate to this problem much better. We have been through it. Executive housing, I have never stayed in a facility for working professionals, so I could never relate to that problem much. So student housing became a very logical choice then to get into it. So that's how we kind of pivoted and got into the whole student housing space, Pawan.
Yeah. I think you covered the second part of the question also about your own instincts of data debate, and a very interesting point that you brought about where a market not being ready for a particular product, right? And especially in a country like India, I think so many cultural factors and like socio-cultural issues sort of need to be accounted for as well when you're building like any sort of a solution, because
Absolutely.
it involves a lot around it. So there's a great
Absolutely.
point of that. Yeah. Okay, so the next thing we wanted to really understand is in the execution of HooLiv itself, right? When we saw your website, we saw that you try to build a much bigger presence in cities like Pune, Jaipur, and Meerut, while not maybe focusing too much on like the cosmopolitans like Bangalore or Mumbai.
Yep.
Or anything like that, right? So I think there's a very interesting thing that we noticed as well, and the execution of sorts, right? In the execution. So in this space, like when there are a few startups that are coming up, and the competition seems to be, and people are looking at building a solution for students in the housing space, right? So what would you say is like a distinguishing factor, and how have you been able to distinguish yourself?
Sure.
One is in terms for customers, what is it like the offering that is unique to you, and the second thing is what you tell to investors and stakeholders, right?
Yeah.
On the back end. So let's
Sure.
start talking about customers and the US.
Sure. Sure. So Pawan, there are a couple of things that you highlighted there. One, if I start with the first part of it, is our choice of the locations. That we definitely, you're very right, that we are extremely bullish on the entire Bharat narrative. So when I say Bharat narrative, we are looking at some of the smaller towns and cities, the non-metros rather. And we are not trying to get into the usual suspects of Delhi, Mumbai, Bangalore, Hyderabad, and so on. And for a variety of reasons. One, the primary one, Pawan, is that when we got into the whole student housing space, once we decided that student housing is the way to go, and we did again a complete research, laid down the landscape of the country, we realized that there were a couple of very nuances when it comes to student housing. One is that if you talk about migratory students and couple that with the presence of private universities, actually private universities have mushroomed across the smaller towns and cities that are not so much in the larger metros. Okay? And these private universities are mandated by the government, but unfortunately, they need to provide the housing accommodation only to the first year students. Some of them do go and provide it for the entire 4 years of the undergrad study and so on, but predominantly for the first year students. So anywhere there is a private university, you have this entire micro market of student housing which is built around that. So if we talk about the smaller towns and cities where we are present, like in Jaipur, Meerut, we are now looking to enter Patna, Nagpur, Bhopal, Indore, they have this amazing student hubs, right? And the supply side is not a constraint. But the good part for us is that supply is very unorganized. So the moment it is unorganized, you have an Oyo moment with us, with you. You can do exactly what Oyo did to the hotel industry.
Yeah.
So that what led us to the entire selection of the tier 2, tier 3 cities. And coupled with the fact that once you are into real estate hospitality, you are looking at heavy capital, you're looking at capital intensive initiatives. So if I'm talking about a Jaipur, my cost of acquisition could be, say, half of what my acquisition could be in a Mumbai or a Bangalore. But at the same time, if we're talking about the profitability, it is almost the same because my operating expense in a Jaipur might be again half of what it is in Bangalore. Right? So my profitability wise is almost similar. So those kind of got us attracted towards the tier 2, tier 3. And for the near future, we are definitely going to continue with that approach. Okay. Now, coming to the other part of it, Pawan, in terms of the other players, the market, how do we differentiate ourselves? Now, Pawan, the market is so nascent. The whole industry, if you could talk about co-living student housing, I think it started somewhere in 2018-19, just before the COVID first wave. And then we had a couple of years, which was like a setback for the entire, the industry, just like with everyone. It was a setback for all of us. And now again, almost the engine is starting up again, afresh. So this space is so nascent. I would be lying to you if I say that we have figured out the magical code or the secret sauce and so on. No. I think what we are currently offering is very, very similar to, say, what 5 other players might be offering right now. And what that is that we are all trying to throw different things on the wall. I think gradually in the next 2 to 3 years, it will become clearer what sticks and what doesn't. But, it would be wrong for me to say that, I'm somewhere figured out the secret code. I haven't. The good part of this space right now, Pawan, is that this is not a winner takes all market yet. I think student housing co-living is at a point where possibly e-commerce in India was a decade back. You had a Flipkart, you had ShopClose, you had Snapdeal, you had so many people, right? And all of them did fairly well. It wasn't a winner takes all market then. And similar thing in the student housing, that there is space for multiple players at this point. Because the market is so huge, so nascent, so virgin. When you talk about the tier 2, tier 3, the non-metros, there's so many cities, right? So many places that you can explore, and in different ways. Obviously, when you talk about the smaller towns and cities, unlike a cosmopolitan, these towns and cities, the challenges that you come across is that you need to be aware of the local context. Right from the way that the preference of students in terms of the meal options. For instance, in Jaipur on our cheat day, so usually Fridays and Sundays are cheat days, where we provide students something that goes beyond the regular meals. So in Jaipur, while we might do with a dal bati, in Pune, that has to be replaced with, say a pav bhaji or something else, right? So this contextualization is very, very key when you talk about some smaller towns and cities. Not so much when you talk about a Mumbai, Delhi, Bangalore. You can get away by having a one-size-fits-all approach in these larger cities.
Yeah.
So coming back again to the competition part, Pawan, I always tell my team one very simple thing, and I firmly believe that a crowded market is very different from a saturated market. A crowded market, you might have 10 people, 15 players. It doesn't matter. I mean, if it is a $30 billion industry, you don't mind being the 10th largest. Who cares?
Yeah.
But the market is still ripe. It has space for a lot of players. I think next 3-4 years, we'll gradually see a lot of consolidation happening in this space, which has already started happening in the Western world. A lot of larger co-living players are acquiring smaller ones to gain presence and so on. For us also, it's a very legitimate expansion strategy that if we are planning to enter Patna very soon. And one of the things we are looking at Patna is that can we acquire some of the smaller brands, local brands there. So that gets the foot in the door, at the same time, we get to understand the market before, putting all our bets in Patna. So I think those kind of consolidations will keep on happening. But at present, the market is fairly open, 10, 15 players, 20 players, that's on the organized side of it. And then I think 90-95% market is unorganized. So that's again a huge space that is available for us to gradually take over. So not too worried about the market size, Pawan, or the number of competitors at this space, and neither are the investors, to be honest. The existing investors we have and so on, we are looking at a large fundraise and so on. So from the new ones we're talking about, I don't think we have come across that being a impediment to the raise. Where the investor, you could say the interest is slightly diminished, Pawan, is that the entire COVID factor acted as a dampener. Because a lot of folks had raised significant capital prior to the lockdowns. And unfortunately, fortunately, the lockdown kind of was much more severe on them, and they had to shut shop. So a lot of investors lost their capital. So the investor sentiment in this space is not as bullish as it used to be pre-COVID.
Mm.
But that is slowly returning. I think it is much better than where we were 6 to 8 months back. It is returning. Possibly it will take about another 6 to 12 months to normalize and be back at that level. But yeah, so that's the lay of the land, Pawan, currently.
Perfect. Yeah. Yeah. I mean, I think coming back to the question, I think great point you mentioned in terms of market size, because while you were talking about that, I was just thinking about like Bangalore itself, right? That is the ecosystem I know of when I was going to college, and looking at the people around me as well. While yes, there are a lot of solutions, especially in a city like Bangalore, you'd assume that all the startups that are trying to build something are already present in Bangalore, right? But despite that, you see that the local PGs, the unorganized sort of this thing, and in general, just going for like a rental agreement with one of the landlords. I think that is still the norm in all of these cities and most of the places, right? So you're right, actually. Yeah, it is the saturated market and the crowded market, the PowerPoint that you brought up there, the excellent point. Yeah. So I was just relating to that and wanted to share that very quickly. Okay, so that's great. And next thing we want to sort of talk about is customer experience and delivery of value, especially when it comes to tech startups, right? Because we live at an age where so much funding and investments and all of that, where startups grow exponentially, and at the same time it becomes such a big challenge to ensure that the offerings that you are providing when you started off are still the exact same that they are, right, throughout, irrespective of how fast you're scaling up. And I think two important things to talk about here. One is with the technology and the quality check of how the existing offerings are and how they're getting delivered. How do you sort of maintain that and ensure that while the growth is there, this is being maintained? And the second thing is in terms of especially for a more infrastructure heavy business like yours, right? The operations and customer support becomes extremely crucial. So how does that also scale accordingly and maintain quality? So first, let's talk about technology and quality of offerings.
Sure. So Pawan, that's an interesting, question. So when we got started into the whole real estate hospitality space, when we looked at the space, we realized that technology in this space was always treated merely as an enabler. It's good to have. It's fine if you don't have it. But I think when we looked at the student demography, 18 to 24, 25 age group, I think you can relate to it. Is that for these students, possibly the most expensive real estate they have is their smartphones. And so technology can just not be an enabler. It has to be the driver of the business. That is fundamentally we believe in, and everything that we're trying to build in terms of the quality of the offerings, in terms of the way that it is delivered and so on. We're trying to make it, the technology is at the center, and then everything revolves around it. And you could say it's partly because of the bias that we came in with. We are all technologists. We built $1 billion business, technology business before. And so we could never we could never detach or give a step brotherly treatment to technology. That is in our DNA. So I think everything that we're doing is kind of trying to revolve around that. So when it came to that, the way that it works is that, a lot of these unorganized PGs or even some smaller operators, the maximum that they do is that they provide a roof on the head, And so if you talk about that, students typically, when they come out of their homes, their budget with respect to the room rentals is always fixed. Even if you provide them a Taj experience, they're not going to pay you Taj rates. Right? So then the entire quest in this venture becomes, how do you get that extra rupee out of their wallet? And that is where technology comes in very, very handy, is that the more and more things you can push to the students on their smartphones directly, the more and more value you can deliver it to them directly. That's where you can help them, help yourself get an extra rupee out of their wallet. And at the same time, it is adding to the experiential stay of the students. It is going beyond just providing a roof on their head. And that is where, even as an organized operator, not just HooLiv, but our competitors, we can differentiate ourselves from the unorganized world. An unorganized world may not have the intent, bandwidth, or the capacity to actually invest and build something on a technology front. Whereas we have that, competency to do that. The small examples. Now, when our survey, we figured that a lot of students are looking for internship opportunities. They're looking for job interviews. They're looking for soft skill training, specifically in the smaller towns and cities, spoken English courses, job interview skills. So we are now partnering with a lot of players in the industry who are already doing that, and we're trying to push it directly to the students through their smartphones or through the HooLiv app that we have. As a HooLiv app holder, you can look for internships and you can look for job opportunities and so on. And gradually now we're trying to do is source projects from the industry through our connects in the tech space and then actually have a bunch of students work on it directly. So these kind of opportunities will start pushing or delivering power directly on their phones, and that is where value lies for both things. That's one part of it. Now, second part, as you also mentioned, in an infrastructure-heavy business or a services-heavy business, there are opportunities for leakages to happen. Wherever you have a human element coming in, you have a potential leakage happening. For instance, I have an asset in, say, in one part of Mirror, and one of my wardens might say, sir, 30 rooms are occupied, whereas in reality, there might be 32 rooms which are occupied. So the warden might be housing his friends in a couple of rooms and pocketing the amount directly. And this is very, very common. So how do you manage that? So what we went ahead and did is that we implemented a complete smart electric meters in all our rooms. So there's, again, we partnered with somebody in the industry and we installed smart electric meters. And those meters are linked with my HooLiv app on the HooLiv CRM. So unless and until a particular room is live on the system, there won't be any power supply to the room. Small things like that. So that ensures that you reduce the leakages to a lot of extent. Similarly, a warden might say, every morning the city heads get on a call with the wardens just to check on what their plans are. A warden might say that, hey, look, I am present at the facility, where in reality, the warden might be sitting at home. So how do you know that? So we went ahead and we built something in-house like geotagging and an image recognition, face recognition. So the wardens have to take a picture, it matches the images, and it just does a geotagging, and it figures out whether the warden is present in the hospital, in the hostel or not. If she is not present, it marks an absent for them. So these kind of things, gradually it came together, Pawan, and we possibly have now one of the finest, you could say, CRMs, or you could say an operating system for the student housing shared accommodation space in India right now. So much so that we are now in a position to sub-license that platform to the others who are in this space. So that is everything that I do in that sense, Pawan, everything that I do to streamline these things, everything that I do to make my operations more technology levered, I am increasing my profitability as well. I'm reducing leakages, I'm increasing my profit. So that is the reason why I said that everything that we're trying to do is with keeping technology at the center and everything revolving around that. So that is how you ensure that you are providing the best of the best services to your tenants, your students, providing a more holistic state, going beyond just a roof. And at the same time, you're taking care of your vendors, you're taking care of your the asset owners, you're taking care of your own wardens, your housekeeping staff. Because end of the day, Pawan, you have a lot of these folks in the services business that you're working with a lot of stakeholders, And so the more and more intuitive the platform is, the more and more technology that you're doing at every possible step, you're eliminating manual effort, the more value you're creating for everyone. And that translates in some way to the quality of service that you provide to the students as well. What we did recently, Pawan, is that we went ahead and we built a night kitchen platform, where in the night the students can order something from their rooms and have it room delivered. We went ahead and built a clone of OLX kind of thing, where outgoing students can put up whatever they want to sell, and it gets circulated and buy sell within the community. So these kind of things, Pawan, is what we're trying to do to ensure that we go beyond just providing a roof on their heads. So that's, I think that kind of addresses your first part of things, like how do we use or leverage technology to provide these services, right?
Yeah.
Now the second, sorry, go ahead.
No, I was just saying, please go to the second part itself. And on the second part, also, really want to ask is about managing vendors that you spoke about, right? Like largely being an aggregator sort of a platform and working with people who are sort of used to working like an unorganized space and not really go so much by contracts and extremely, let's say, structured technology for them to work with. What is the process that you also use in terms of building a good relation with them, ensuring that you are continually providing a good service. They are continually providing a good service on behalf of you, right? So just I wanted to add that also as well when you're taking the next part.
So Pawan, what we realized when you are working with asset owners who from smaller towns and cities and so on, the challenge happens when things are not transparent. When there is an element of doubt, there is not enough trust. I think that is where the challenges happen, and that kind of keeps cascading, and at one point in time, it boils over. So I think very, very simple thing, Pawan, is that during the entire COVID period, we had this construct with the asset owners that anytime there is a pandemic or a lockdown, we won't be paying them a minimum guarantee, but we will be getting into a revenue sharing mode when they take X% and the remaining Y is with us. right? Now, what we did is we went and we built an interface for these asset owners that they can just simple app, they can open it on their phones and they can look exactly at all the rooms that are occupied, how many students are staying, and what was the collection that month. So what is the X% of that is going to come to them. So absolutely in a white and paper and black and white Pawan, and that helped us build a lot of trust with these asset owners, particularly during that, when we did it in the COVID time, it was a tough period for everyone, right? Everyone was looking for liquidity and so on. So when we went ahead and we provided this thing to the owners, we built a lot of good karma over there. That built a lot of trust that, look, these guys are not hiding anything from us. And even today, they have an access, they can exactly figure out how many students are there in the property, which rooms are occupied, what's the inflow coming in, and so on. Okay. Wherever we have the revenue sharing models. Even in terms of the vendors, vendor management, there are a lot of vendors, right? Right from your food vendors to your housekeeping staff, your security agencies, we provide the security guards and so on. So here again, what we did is that we provided them an interface where they can see all their invoices that they have raised and the status of the invoice, how much payment has been made on a daily basis and how much is pending. So that again gave them a lot of clarity that, look, there could be time where the payments are delayed based on cash flows, there could be delays and so on. But at least when they see that, look, the intent behind this company is right, they are, there might be delays, but they are going ahead and honoring the payments and so on. That builds a lot of trust. So that is where I think technology, people like us coming in the space, we bring in that element and we, kind of tell these people, look, this is how we're going to operate. And trust me, Pawan, everybody likes transparency. It doesn't matter whether you are in a metro or a smaller town cities. I think transparency builds trust. And that is what we're trying to work on, which is again a challenge for some of the unorganized operators and so on. A lot of them work under the radar. A lot of them try to see how they can evade paying the GSTs and so on. With us, it's a pretty clarity that, hey, look, this is what the collections was, this is what the payment was, this is what your portion is, and so on. So everything in black and white. So I think that is where technology plays a big, big role, Pawan, that you don't have to convince something of somebody. It's already there right in front of you.
Yeah. No, this is great. I mean, oftentimes I think with businesses like this, and this is something I think we see a lot with Uber, and it's the first example I get, right? On the side of your customer, it's great technology solving a lot of problems and almost every roadblock that a person has eradicated, right? It's a great technology for them. But often in a country like India, the other side, at the supply side, if we're talking about it, becomes extremely difficult to manage for startups because they're not able to leverage technology well enough to provide a good service to them, and especially in the case of cab drivers, right? And that they see that. But
and very very significant, Pawan, something I'll reflect upon. This is something I learned from there's a startup that I worked with prior to my first venture. I was working with this gentleman, an amazing gentleman. He pioneered the healthcare vertical at Wipro and so on. So amazing gentleman. And I was heading the sales and so on. So I used to prepare a lot of agreements and contracts. So anytime I take any agreement to him, the first thing you would say is that, Chinmoy, the agreement needs to be absolutely balanced. It needs to be a win-win. Because if it is loaded on my favor, we might go for, we might win the battle, but, or we might lose the war, that it will eventually come back. So if it is right, if it is balanced and transparent right from day one, there's a win for both. And then obviously the fact that you don't have to go back to the lawyers again and again, right? So you close it in less iterations. But that is something I learned from him, that trust, transparency always goes a long way in building that trust. And once you have that, it's amazing, Pawan, that how many things that you can get it done if there is a trust and a transparency between them. A lot of times when we have this good rapport with the owners, we go back to them and say, look, this month I'm slightly short on my cash flows. Can we delay your payments till next month? And they agree to it. If you have built that relationship, they agree to it. But if you would have been very opaque and say, I'm not going to share anything, just take whatever I'm going to pay to you, they might just accept it. But the next time I have a favor to ask, they would not entertain it.
Yeah. No, I mean, this is a tremendous insight. And I think especially for a place like India, where if you're successfully able to do that and, build that trust, then I think people go that extra mile to sort of do business with you and work with you again and again. So yeah, that's a great point. I'm very glad that like this sort of came out of that. Okay, awesome. We'll go to the next thing, and we want to talk about fundraising next, right? And you're someone who, in the most traditional sense as well, you have gone through fundraising rounds in the past. And we also saw that you were a user of Recur Club to raise funds without diluting equity as well. So this funding remains like an elephant in the room right now, right, for innovators and especially young entrepreneurs who are looking to approach that and do something for their startups. So what advice would you have at a very early stage for a founder or for a startup when it comes to funding and investments? One is in terms of finding investment sources. What would you recommend? And second thing is in terms of valuation of a company and dilution of a certain percentage of equity. So what are some, what is like a rule of thumb that people can, your entrepreneurs can follow? Let's start with finding investment sources.
Sure. So yeah, definitely. I think when we started my first venture, Pawan, way back 2012, 13, the investment ecosystem in India was not as robust. I think angel investment was still not recognized as a genuine asset class. And over the last decade, a lot of things have evolved for good. I think we are much more matured. When we're still, I think, in terms of the ticket sizes, in terms of the number of rounds we raise before an IPO or an acquisition, is slightly kind of behind the curve with respect to the Silicon Valley, for instance. But we think we'll get there. I think we're making the right noises in that sense, right? So when we were looking at a fundraise for HooLiv, yes, we did raise an equity round that was a pre-revenue round from one of the large public listed entity. And we were able to do that because of our successful exit and so on. But I understand that as a first-time founder, to raise rounds at a pre-revenue round just on an idea on a paper, it is relatively tougher still, right? And that is where my advice would come in, is that now the ecosystem is so mature that just don't just look at an equity finance. There could be there is non-dilutive capital in the form of revenue-based financing, invoice financing. There is working capital financing with Startup India. There's a lot of schemes being floated in terms of seed financing. Then you have the Recur, which is invoice financing. You have Club, which is revenue-based financing. Some people that we took help of. So there are so many alternative methods of raising capital that if you're really at an idea stage or you're just starting out, you're still trying to build that product market fit, you're still in an initial stage where you have not yet reached the sustainability or growth stage, there are alternatives available for you to draw that capital, not dilute, and actually test out your offerings until the time that you're confident enough and say, okay, you know what, I now need a larger ticket size. I now need to go to an institutional VC and raise equity round. So I think that would be my 2 cents, Pawan, is that there are different modes now available for entrepreneurs and startups to explore. We need not restrict ourselves just to dilutive capital.
Yeah.
Okay. And in a businesses like ours, where we have high gross margin businesses, for us, it makes non-dilutive capital even more attractive because we have the repayment capabilities. I understand that in a tech business or people who are building products where the revenues might be distant, they're looking at revenue-based financing or invoice financing is a challenge. One, because you don't have a cash flow or your cash flows may not be predictable, like in case of ours, which is very predictable businesses. Or the fact that these revenue-based financing or invoice-based financing may not look at you because they also need to see a steady stream of income coming in so that they take their percentage of their EMIs out. Right. So in that case, I would recommend that look at some of the Startup India schemes. There are so many beautiful schemes right now which look at even if idea stage or pre-revenue companies. Right. So I'm really glad in that sense, Pawan, that we have come to a time space where we have all these opportunities available. What I think where I've seen a lot of people not getting into these areas, Pawan, is there is a whole sexiness to raising institutional capital or dilutive capital, right? You get a press, you get a news story, you get an Link42, which sometimes not the case. If you so the funny part, Pawan, is that either you're a startup or you're an MSME. So it's almost that kind of bifurcation. So if you're an MSME, you're almost thought of going the traditional route of bank loans and those kind of things. And if you're raising institutional capital, you're a startup. Right? Whereas if you look at it in reality, MSME is the broader umbrella. All of us are part of MSMEs, right? So all these modes of capital are equally respectable. But I think there's a sense of sexiness with raising it from VCs. And so a lot of people try to run behind them or raise that capital. But if you are open-minded, if you're broad enough, do explore all these different options. There is much more better than raising dilutive capital at a very early stage. Right? The next part, Pawan, in terms of how much you raise, how does the dilutions work? Having said everything, sir, and you can come across thousands of literature and work around it, but there is very, very simple rule of the thumb, Pawan, around this.
if you're raising your first round, an angel round or a seed round, right? If you have a business which is highly patentable, which then your dilution. So start from, I always tell entrepreneurs, start from do a calculation in reverse. Don't talk about this is how much I'm raising and this is the valuation of my company. So this is the dilution. No, start from the dilution part of it. Because very, very simply, if you have a patentable business, you are not looking to dilute more than say 15 to 20% in your first round, okay, in your angel seed round. And an investor will not take, so that's one part of it where you have a very patentable IP business. If you're a slightly commoditized business, investor will not take anything less than say 30-35%. Very commoditized business. Majority, 8 out of 10 ventures in India, startup at a seed level, angel level, Pawan, they fall somewhere in between. I would go to the investor and say, I'm raising X and I'm ready to give you 22%. Investor will say 28%, and you arrive at 24-25%. That's majority of deals in the country. Because what happens, Pawan, is that at such an early stage, at a seed or an angel stage, it is not so much about valuation and dilution, but it is about percentage ownership. So the investor is looking at owning a certain percentage of the company, and you are also going to the table with that. Look, I am ready to give 22% of my ownership. Investor is saying 28%, you arrive at 25%, right? And then everything falls back. What do you say? Okay, 25% for 5 CR, so I have a 20 CR, my valuation of my company. So you don't get into the table with saying I have a 20 CR valuation and I want to raise 5 CR, so this is my dilution. No, it doesn't happen that way. We might say, right, put whatever in the pitch deck. End of the day, it is about percentage ownership that you are ready to dilute or to give away at a very early stage. Because you have nothing else to rely on, right? I have come across a lot of wonderful angels in my previous venture. Now, the first thing that they say is, we don't want to look at your spreadsheets. Because in a spreadsheet, everyone is a unicorn, right? So there's no point in looking at a spreadsheet at an angel stage, early stage. Keep that away. You tell us how much you need, how much you're willing to give us in percentage of ownership, the deal is done. When you talk about slightly growth stage, like the funds that we're trying to raise now, much significant higher capital, where you have a body of work behind you, you have the numbers, you have something to extrapolate on. Yes, there you might run into do a DCF, you come up with comparables, you figure out that this is my valuation of my company, and so this is what the dilution is going to be. But at an early stage, just go to the table with the number in your mind that this is how much I'm going to give. Everything works backward from that.
Yeah. I think very good advice, I think, for early stage ventures. Okay, let's talk about, while we're on the topic of startups and early stage growth phase and all that, numbers start becoming extremely important, right? And marketing, sales, branding, all of these aspects are coming into the picture. And for this, we sort of want to understand your journey and how the journey was in first getting your first, like, let's say, few users, like the early adopters, like let's say below 1,000, right? The first set of people who came. What was that phase like, and how did you get them from a more marketing and branding angle? And the second thing is the scale and the growth phase after that. So what is the customer acquisition over there looking like, and the marketing over there looking like? Yeah.
So I think on Pawan, on a broader kind of spectrum, what we've seen is there's a clear demarcation in the whole marketing approach that we had in our first venture, where it was primarily an enterprise sale, a B2B sale, where you are reaching out to a limited set of people. You know that this is your universe, and you might get lucky in cold calling, cold emailing, and so on. So you did not, have to get out in the public that much. You could still work in your own silos and be successful. When we started this venture, which is more into direct to consumers or like a B2B2C or a B2C, one of the things that has changed over this period, Pawan, is that yes, definitely the brand itself needs to be out there. It needs to speak what it is about, what does it stand for, what is the value it is creating for all the stakeholders. There's another significant thing that has changed is the brand that we as promoters or the founders of the company, we are building. What is it that we are speaking about in social media? What is that we are speaking about our company and so on? So you look at any new age venture, I think it is imperative that we as founders, we need to be out there, speaking on Twitter, speaking on social media, that look, this is what we're doing. And it not always be our brand related. It could be anything that we are passionate about or speak about, because that kind of, in a way, reflects what the type of organization we're building or what we are trying to do, the ethos of it.
So I think that has markedly changed, Pawan, or the way that how we go about marketing, and that becomes a big part of how we are marketing ourselves and our venture. So that is a very you could say it's not in the face marketing, but at the same time, it is kind of providing those foundations or structures on which your entire venture is resting. That you as founders, what is the image, or what are the things that you are saying, right? So that is one part of it, Pawan. And then obviously, when you come to the actual driving of occupancies and so on, you get to the usual suspects of on the online campaigns. There has been changes over the years. Maybe 7, 8 years back, Facebook was a very legitimate way to reach out to the users. Now we have moved on to Instagrams and so on. Facebook we do hardly anything on Facebook anymore. So you moved on to that. You moved on to Twitter. How do you position yourself and so on? You do direct campaigns, WhatsApp promotions, campaigns, and so on. So even in our journey, Pawan, the initial set of users, consumers that we got to our facilities, our accommodations, was through that, through doing these kind of campaigns. And specific to our business, there is a lot of on-the-ground marketing that is also required in the terms of distribution of flyers, pamphlets, or maybe just placing yourself outside of institutes and looking at students who are looking for accommodations, helping them to your facility and so on. So there was a lot of those kind of elements also involved. What happened beyond a certain point, Pawan, is that once, this might be a peculiarity to our business, is that once you have a certain student staying with you, if he or she likes the asset or the facility, someone else coming in from their hometown, or they know them or something, they'll reach out to them and say, hey, Chinmoy, where do you stay? Can we come and stay in the same facility? They're like, yeah, sure, come over. It's a good facility. So the word of mouth becomes a very, very strong thing for us. So in that way, again, it takes back to the earlier question, is that in terms of the service level quality, we have to be right up there, because otherwise we lose out on this word of mouth, which is a big, big pull factor for us, right? And then obviously your collaborations with institutes and so on. So gradually we started becoming more of a B2B2C player, where we collaborate with institutes, coaching centers, whether it's your Allen, FitG's, your Resonance, or whether it is JSS and so on. So you get into all that, and that is what keep driving your occupancy. So that is where the mode we are right now, Pawan, where more and more our occupancies are driven through word of mouth and these kind of associations. So we don't need to get out there in terms of direct campaigns so much. We do that. The marketing that we do, Pawan, is mostly in terms of brand building rather than driving occupancy or demand generation. So not so much into demand gen, but more into brand building.
Yeah, and I think that makes a lot of sense, especially for I think a place where you stay, right? And when it comes to that, it sort of becomes like a very personal thing to you, and it becomes like a decision where you put a lot of thought into it, and where you sort of want to trust the place a lot, right? And I think in those senses, branding yourself very well and like tying up with more credible, like if your institution is recommending something and this is a good place for you to stay at, then I think that's an extremely big factor.
Absolutely. So, I mean, a lot of, I think, and the fact, Pawan, is that we are catering to, while we're housing students, we're actually selling it to the parents, right? So the moment the parents hear from the institute that, look, this is our off-campus facility, or this is where similar SOPs are followed, that instantly builds a credibility with the parents. Right? It does half the selling for you. So.
Yeah. I think that's a great one. It's a great one. Okay, let's talk about the technology side now, especially for tech-enabled businesses, right? And a lot of, like, let's say in early stages, when you are building a business on the back of technology, it sort of becomes like an obsession at some point to have the perfect technology right from the get-go. And then instead of focusing on building a credible business out of it, you sort of end up getting caught in the loop of improving the technology to no end, right? And you're just obsessing over it. So as someone, you have been part of, like, so you come from an IT background and you have spent a lot of time with startups who are digital first in terms of businesses, right? So how do you suggest entrepreneurs approach technology in general? And in two different contexts. One is when creating your MVP, what is like a level of obsession you need to have, and how much does technology play a part? And the second thing is in evolving the product, what is the right balance between, let's say, business and technology? So let's start with talking about creating an MVP.
Sure. So I think for this, Pawan, I'll fall back on my first venture, which was again a very tech heavy data analytics, that venture. So I think some of these things in terms of MVP or product market fit and so on, I think the whole you could say the whole narrative has been pushed a lot by
our MBA institutes, our books, which talk about this and so on. But having been in the entrepreneurial journey for 10 years, 12 years, I can speak with fair degree of confidence, Pawan, that a lot of these things are actually impediments to you growing faster or you actually building a more solid business. For instance, if I talk about my first venture, we actually started off with building something where people could just store their health records and share it across and so on, like a health vault kind of thing. We started with that and we said, hey, look, this is a product market fit. We have great product market fit, people need it and so on. So let's push it. Now, what we realized is there was hardly any usage of it. Not many people were storing it. And the problem was not with the platform per se, but the problem was that everybody was sitting with huge pile of paper reports on their hands. And you can't expect everybody to scan documents and upload it on your portal. That's not going to happen unless there is a direct flow of information from the labs, the hospitals, the diagnostic centers. It's not going to happen. So when you talk about that, in that sense, Pawan, when you talk about this product market fit, our product was perfect. The market was not. The market we were approaching was not. But what typically do we do, and that addresses the first part, is that what typically we do is that we beat ourselves up and we say, what have we built? The market doesn't need it. So we go back to the board and we start adding 10 more features to it. Right? Then we add 50 more features. Then we go back to the market again. And still if the reception is lukewarm, we go back again and we say, no, you know what? This product is still not matured. We bid down our product management team. We bid down our product team and say, we need this X, Y, Z. These guys are doing that. We need that and so on. But we should just take a long breath and say, hey, you know what? Maybe the market is wrong. We are approaching the wrong market. And that's precisely what we did, Pawan, is that we said, you know what? Let's try out in a different way. So what we did is we started approaching a lot of these large insurance companies. We started approaching diagnostic centers, made it completely a B2B kind of thing. And we struck gold. The first client we signed up was the largest general insurance company in India. The second client we signed up was the second largest general insurance company in India. So pretty much now, if I speak about today, I think half of the insurance companies in India are using the platform which we built at that day. So we got a foot in the door through exactly the same product, not adding any more bells and whistles to it. We got into the door through that. And obviously, once you're into the doors, your product morphs, you add more things based on feedback or inputs, it morphs into something much bigger and better, right? But that is unknowingly, I think we didn't have any past experience to, right? I think subconsciously, unknowingly, we didn't go into the route of beating ourselves up in terms of the product not selling and, coming back and being brutal on ourselves and saying, hey, look, this is not working. We need to add a few more things and so on. There were some of our peers who did that at that point in time, who stayed in the that same space, but they tried keep on adding bells and whistles to their product, and unfortunately they could not last too long. So I think those kind of things, this product market fit, is again something that's really is abused beyond means. I think we need to step back and say, hey, look, it's fine. And how do you know you've achieved product market fit? A lot of times we talk about power in terms of eyeballs, in terms of downloads, in terms of impressions. But one thing we've again learned the hard way is that you have not achieved product market fit till the time you have not sold it. If you have not drawn $1 out of somebody's wallet, you have not achieved product market fit. Again, if I fall back on my previous venture, what we went ahead and we did, Pawan, is that we built this. So we had a preventive care platform where we used to do the risk assessment of someone based on a lot of data inputs, right? Then we were able to tell that a person might be at risk to diabetes or heart conditions or cardiovascular issues and so on. Then we said, hey, why don't we go ahead and build this entire platform of where we aggregate all these labs and diagnostic centers from India, and people can go ahead and book their lab checkups online and so on and so forth. Yeah, great. We offered that as a platform. People were doing it and so on. Then after a while, we said, where's our win? Let's try to make some money out of it. And the moment we decided to turn that tap on, Pawan, everything went downhill. Because people always migrated to something which was the next cheaper option or the option which is still free. So the moment you're offering something free or offering a cashback or discounts, you are not really earning loyal customers, you're bribing customers. And the moment you have somebody else come in with a similar free offering, they will jump ship. We all jump ship, right? And because that's how you have acquired this. So what product market fit have you achieved?
with all those million customers, 2 million customers, if you haven't sold it to them, So the simple point of fact is, Pawan, is that if you have not been able to sell it to your first customer, you will not be able to sell it to your millionth customer. It's not a tap that magically you can turn one day and say, look, from today onwards, I'm going to monetize it. It's never going to happen. So product market fit, a lot of these nuances which get very easily missed by early or first time entrepreneurs, right? Similarly, when you come to minimum viable product, how do you know what is a minimum viable product unless you're out there? And that kind of ties up with the first part of what I said, is that if you keep on beating yourself up and adding bells and features, bells, whistles to your product, one, you're never going to build an MVP, and second, you're never going to go out of the garage. And by the time, and this, another bigger problem with that, Pawan, is that, say for instance, you're mapped out and you said, look, I have these 3 things. I need to add these 5 more things before I market it, right? Now you go back, you build those 8 things, but by the time you're in the market, someone else more swifter, disruptive, with larger access to pockets might have come back, with 10 more features. Right? So only thing that you're doing with delaying going to the market is that, you're losing out those grounds. So my simple, opinion is that, hey, look, hit the market as soon as you are confident that this is a product that will fly. Maybe then once you get into the market, you might run into a product market misfit. That again, go back and figure out whether it is really the product or whether you are looking at it from a wrong market perspective. So those would be my 2 cents in terms of MVP and the product market, Pawan. I think, sorry, did I miss any part of your?
No, you got it perfectly well. And I think I was going to come to the next part as well, right? Which is the post PMF stage and sort of like the growth phase where you are now doing decently well, and both in terms of revenues and profit, let's say. But there is always a product roadmap, right? There's always a set of would-be features that either you want internally to see in your product, in your vision, or your customers have been heavily asking for. So what is that prioritization process like in terms of adding these good features to a product?
So I think if we talk about that, Pawan, I think the best example would be what Brian Chesky did yesterday, right? In terms of Airbnb, I think he went onto Twitter and said, "Give me 10 things which you want us to improve." Right? I think, and that's an amazing way, because I think going forward, as again comes back to the other thing that we talked about, the brand building and the promoters being out there, Pawan. I think a lot of these things are going to happen democratically. Where you're leveraging social media to build a product that you think the customers are suggesting that they need. Right? So there is one part of it definitely, Pawan, where you are subscribing those feedback or inputs from the market, and you're saying, hey, look, these are the things my customers need, and so I'm going to do that. But the other part of it is also that you have your own vision or your own roadmap in terms of where you want the product to be, where you want to see it go, and so on. So I think it always comes down between taking both these things, both these inputs, and then there are a lot of stakeholders also in question, right, Pawan? You cannot, this decision of prioritizing what you want to do first and what you want to do second, it cannot be taken in isolation of just the product per se. You need to create a shareholder value. You need to give returns to, you need to give returns to your other shareholders, the promoters. Everybody needs to win. So I think you bring in those complexities also, and then you prioritize that. Look, if I do this XYZ things, I'm going to win in the short term. It's what my customers need. Maybe I will increase my ARPUs, and that's what I'm going to do. And maybe these 5 things which are going a slightly longer gestation period, and not really, the revenues may not start flowing in immediately. Let me park that and take that up when I'm doing this with short-term goals. So I think that decision, Pawan, as an organization, it's done not in isolation, but in a combination of a lot of these factors. Your investors want an exit, so you definitely want to improve your top line so that you can raise the next round. You can give these guys a better valuation. It's not unreasonable ask from anyone. So you need to factor this in before you decide on how you want to do that, right? And then the last part, Pawan, is that there is some things that is inbuilt as part of your DNA and the culture that you want to do certain things, and maybe the market might be speaking against it. The market may not want it, market may be speaking against it, but you're so convinced, you're so convinced of that as a founder, a promoter, or an inventor, that you want to go ahead and do it. I think if you talk about Musk and all the prime examples of it, right? If you believe strongly in that, he just goes ahead and do it. It's such amazing to, right? I don't think market told him that we want to go to Mars, right? But he just went ahead and did it. So the amount of conviction he has in what he believes, I think that again gets factored in, Pawan, in the way that we prioritize all these things, what to pick and what not to pick.
Yeah. I think perfectly put. Yeah. Okay. Next thing I want to come is it's to talk about an exit, right? Because you had an exit from your previous startup as well, and we also saw that you mentioned how an exit is not like an ideal scenario because it's like sort of handing over your child to someone else because you put in so much of your work into it and all of that, right? But it's come to a stage where, or rather, it's always been a stage where acquisition sort of is a way to mark your success, right? As an entrepreneur, saying that you were able to succeed, I guess, in like a traditional sense. So, from your experience with an exit about an acquisition and some pointers that you'd like to share about it, what is the process like in terms of answering like the why you question? So, how does the deciding factor happen between the acquirer and the acquiree, let's say? And the second thing is, what is like a behind the scenes process of the negotiations and the formalities that happen, and what are some things that people need to know or people don't generally know about an acquisition? So let's start with the why you question and
Sure.
how it happens.
Yeah, I think Pawan, you hit the nail. Is that an acquisition is never an ideal exit for an entrepreneur. Let's be honest. At least the first time entrepreneur. Because what happens, Pawan, is that the first time that you're building something, you're building it from your heart. The second time, like for instance, now I think there's part heart and part head involved too. So the first time is so much of passion, so much of your blood and sweat that has gone into it. It is practically, for all practical purposes, it is your baby. So it becomes an extremely difficult choice when you're looking at an exit via an M&A, an M&A exit, or even otherwise. So it becomes a very difficult choice, right? Now, the way that we went about it, at least for one, is that we broke it down and we said, hey, look, who are the stakeholders that we have with us? We have the team, big stakeholders, the people who work with us. We have our own promoters, the four of us. We have our investors, and we have our customers. Right? So these were the four big stakeholders that we had in our venture. So when the offer came in for the acquisition, we kind of sat down and said, does it make sense for each of the stakeholders? Right? For our investors, it was a great exit to them, so definitely it made sense. For our team, we had built about an 80 to 90 member team, and the acquisition, post acquisition, they would have got definitely much better packages, more marketable salaries, and so on. So it was a win for them. And for our customers too, they would now see not a startup offering them the product, but a good company offering them the product. So that ensures more stability and so on, and you can do much more work. So all these three were checkboxes, right? Now, all these three checkboxes were ticked. So the final one was, does it make sense for the promoters, right? And that is where the tricky part lies. Now, given an ideal scenario, would you like to stick around and build it yourself and so on? Yes, I would absolutely do that, right? But the decision came to, the factors that were put into all in the decision making, Pawan, was some things related to the personal lives of all of us, the phases that we were going through. That kind of got factored in, and we said, look, this exit is going to be a good one, and it's going to give us a good cushion, and some things that we needed in our personal lives, some of the promoters in my team, and so should we do it? It made sense, and that was one. And secondly, so we had Dr. Malpani as one of our lead investors, Andred Malpani. And he came with a beautiful thing. He said, you know what, you guys, you have run this for 5 years. It was your first venture. They were good success, good exit. Learn from everything that you've done wrong. And maybe your next venture, you start at a different level. So and think of it as that now your baby is grown up. He or she is above 18 and they're moving out of their home and having a wing of their own. So think it from that. It is difficult, but at the same time, now you might leave it to fly much higher, which can happen with this new group coming in and taking it over, which has happened in fact. It's become a large now platform in Southeast Asia and so on. So do that, right? So that is what happened, Pawan. And so those were all factored in, both the financial aspect of it, the softer side of it, and that is how we went ahead with the acquisition. But I think that has become a rule for us, even in future, any acquisition happens, or even if we are, I'm advising somebody on that, I would say that break it down into all your stakeholders and ensure that it makes sense for all of them. If it doesn't make sense for any of them, then maybe that either the offer is not good enough, or maybe the acquisition doesn't make sense at that point in time, right? So that would be my condition of getting into a table, right? Now to the other part of it, how does the negotiation work after that? And I think what happens, Pawan, is there is always this you could say misunderstanding sort of. when you're raising funds, you can raise 10 million at a 100 million valuation, right? Because the investor coming in is not giving you 100 million. But when you're doing an M&A, you cannot expect 100 million valuation. Because that's what the amount the investor is going to pay you. So the valuations and all have to be adjusted accordingly. That's where your revenue multiples come in, your EBITDA multiples come in, your comparables come in, and that's what the investor is going to come to the table and say, look, the comparables in this industry have been 5x revenue, 8x EBITDA. So that is what we are going to offer you. And so you better have a counter on those lines rather than coming and saying, look, if I go ahead and raise 10 million now, somebody is going to give me 100 million valuation. So that's not it's very an apple to orange kind of thing, right? So that is where the negotiations on all start, right? That they are going to come to the table and say, look, we're going to give you X times EBITDA. And you are going to counter that saying, oh, look at IP, what I have built, my customers, my team, and so on. So how do you do that, right? That is one part of it, which is still, I would say, Pawan, anything related to the numbers is still easily manageable and doable. Where it becomes tricky is in terms of the post-acquisition activities. Ronnie Screwvala has said beautiful things in one of his videos, is that if you have founded a company, you cannot work for the company. And that is true. Even in our case, post-acquisition, we were so used to taking our own decisions, right? Nobody tells us what to do. So, when we suddenly started hearing someone telling us, Chinmoy, go ahead and do this, I was like, and it might be a beautiful suggestion, but my ego comes in front. Like, how can somebody tell me what to do? And that's where you run into frictions. And that's what happened. I think about a year or so, we managed there, and finally we were like, you know what, guys, we cannot work for anyone else again. Let's go back and do something, on our own. So, and the guys who acquired us were nice enough. I think they are so veterans of this. They knew that this was coming. You cannot have the promoters stick around for it. They will go out. So I think those part becomes more critical. That how you structure your entire exit, how you structure your payments linked to any deliverables, linked to any exits. How long you have your, for example, your vesting schedule. How does the vesting schedule look like? Those things, I would say, become more crucial, Pawan, in an M&A rather than just the pure number in terms of the acquisition. Those is easy to handle. Right? So that's where it is, Pawan.
No, beautiful. Yeah, I think it's a great insight into the journey, and I think a lot of it's going to be supremely useful for any budding entrepreneurs out there to sort of hear about the process, because this is not something that comes to the limelight, right? Like, you'll see Shark Tank, you'll see everything about the valuations, about diluting some equity and fundraising and all that, but I think this is like a whole different aspect that you brought out very nicely. So thank you so much for talking about that journey. I think, and this brings us perfectly to tying this to your journey, and once the exit is done for you and your promoters, co-promoters, to now launch something new and start something of your own, right? And it's sort of like a philosophical question, and something that we're talking about, like an ideal approach for an entrepreneur, what a perfect approach is, which is, do you leverage on your experience of particular domains and do just stick to that and build new solutions in that, or do you now venture into new territories and figuring out what to build? I think for you it was more of the latter, where housing, student housing and all that was a relatively new domain, at least in terms of work experience for you. So you sort of took that route. But what would you suggest in terms of first, like we said, right, leveraging your experience and working on an idea, maybe not for your second or third startup, even for your first startup, like let's say for professionals who are in the job right now and they understand a lot about a particular industry, do you leverage that and sort of stick to that, or what's the other process like where you went into new territories and figure out something?
Yes, very, very interesting, Pawan. So Pawan, I think when you're doing it for the first time, right, it makes sense to leverage on your domain or what you have been doing. We leveraged on healthcare, which I have been all my life. So I think that was a very easy choice for me. And also for the fact that I didn't know anything else. But even despite that, if you talk about what we call as the Flipkart mafia, right? All of them have went ahead and started something which is in a very similar thing to what they were doing. Right? All the successful ventures and so on. So I think in the first venture, it makes sense. And I do not agree with a lot of people who said that domain skill is overrated. I do not agree. I think domain skills is rightly rated. It's not underrated or overrated. You do need, it helps you. It helps you to speak that language. It helps you when you're selling out there and selling. And if you can speak that language, it definitely helps. That domain part of it. So in the second venture, however, Pawan, what I've seen is that when we got into this, I think when you're looking at a second or the third venture and so on, yes, that's a point in time where domain becomes slightly irrelevant. Because what we have realized is that the fundamentals or the foundation of building a venture is pretty much the same. The way that you hire people, the way that you manage your stakeholders, the way that you manage your finances, the way that you manage your regulatory side of things, those are in same across industry, across domains. That doesn't change, right? So in this particular business, when we moved from healthcare to real estate, hospitality, we didn't know anything about real estate or hospitality, but we knew about how to build and scale a business. Right. So what we had to acquire is gradually through the last 3-4 years, we have acquired a lot of knowledge in terms of the real estate, which we had to. If you have to sell effectively, you have to know that. So we gradually kind of got that. But I don't think at this point in time, even not being from a healthcare, a real estate background, we are anyway handicapped when it comes to discussing it with somebody who has been in this space for long. Right. So I think domain becomes slightly irrelevant in your second and third ventures, but in the first venture, if you're sticking to something that it's not a rule again, right? A lot of wonderful companies, big companies have been started by people who have absolutely no clue in that, and that was their first venture. So I don't think that's any rule of thumb, but I would be more confident if I'm a first-time entrepreneur in doing something which I have the knowledge of, getting into. I think that just makes me more comfortable in terms of going into the market. So that's where I come from, Pawan. In terms of how you rate your domain skills of it. And sorry, I forgot there was other part.
No, it was the same thing. Like one was new leveraging experience, second one was venturing into new territories. I think you covered a case for both of them. And yeah, I think rightly, like you mentioned, and maybe on the other side as well for investors, I presume it becomes a lot about trusting the founder and knowing where to put your money when you've seen that a person has like a couple of years of experience, at least in a particular domain, and now they're building a solution for it. I think that becomes so much more trustable investment point of view as well.
Yeah, absolutely, Pawan. You're very right. I mean, at least at an early stage when you have nothing, right? You just are sitting, it's your face and your pedigree which is working for you. So I think that stage it becomes, and that's why I have incredible respect for the angel investors. Trust me, Pawan, after exiting the first venture, I tried my hands at angel investing, and it is so tough to part with your money. so I think I have incredible respect for them to give their money to a complete unknown stranger. It takes some guts.
So
that point, your domain, your knowledge of that space definitely comes in handy.
And I think like by means of this podcast, also by talking to both entrepreneurs on one side of the table, and we actually had a couple of investors on as well, and to get a completely different perspective from them about how picky they are with their investments, and it makes so much sense when they explain the rationale behind it, and that's when you really start thinking.
If we have time, Pawan, I'll just take 5 minutes to narrate a beautiful thing that we had when our first fundraise. So we were raising it from Mumbai Angels that time, and Dr. Anirudh Malpani, a large, I think an angel investor, big time. So he was taking the lead. So Mumbai Angel had scheduled this call, and so I was waiting for them to patch me in, and Dr. Malpani was waiting for me to call him. So I think we had like 10-15 minutes into the meeting time, and no calls were coming. So I just took a chance and I called him up directly. And so he just said, Chinmoy, I've been waiting for 10 minutes, 15 minutes, and I think we have started on a very wrong foot. So let me do one thing. Let me just send you a few questions. You will send me the responses. If it kind of like it, then we'll go with the next steps. So it was a bit pissed. So he sent us this email, and we were like, hey, we have got nothing to lose, right? I mean, we're already done. So we gave the more brutal responses, like as honest as we could to the fore. So I was saying that we sent back the more brutal and honest responses, and we were like, this is gone, this deal is gone. But surprisingly, Mumbai Angels comes back and says that Dr. Malpani would like to meet you in person, the promoters. So he called us to his Kolaba office, and my partner, Dr. Rashmi, she came down from Pune, and the three of us, we flew down from Delhi. We went to Pune, and then we drove to Mumbai and so on. So we went to his office, and I think for the next 1 hour when he met us, he used to ask us a question, and any response he used to give, he used to type exactly the opposite and used to Google exactly the opposite and show us that, look, what you're saying is incorrect. This is what Google's, So after an hour when we left, we were like, what kind of dude is this? He called us all the way from Delhi and Pune. He would have just said no on the phone. Why did he call us? So we were driving back, very disheartened. We were on our way back to Pune, and we had stopped for snacks or something. And Mumbai Indian guys call up and says, Dr. Malpani is super impressed, and you'd like to take this forward. And we're like, what?
what happened is, so later on when, we used to sit with him for informally and all, he told us a very nice thing. He said, when I was Googling and showing you, what the exact opposite, I wasn't giving you the exact, I was just trying to see how you're reacting. And you carried yourself with great, integrity and sincerity. So that is what it built to me, because I have nothing else to fall back. So that's a beautiful thing. It always stayed with us. It was the first investor meeting, and we're like, what a jerk! Why did he call us?
Yeah. Brilliant. Well, that's a very nice anecdote as well. Thank you so much for sharing that. Okay, to go on to move on to the next question, right? And this is for like as part of this podcast, we've spoken to a lot of extremely young entrepreneurs who have taken the leap towards entrepreneurship, right? But at the back of these people's mind, there's always a bit of a question that what if this doesn't work out that well, right? Because you then go on to pursue a different career, but at this point, you've sort of become like a jack of all trades in a way, but you don't have extremely specific domain knowledge, let's say, about a particular topic, right? And that starts weighing on the minds of young entrepreneurs. So when it comes to taking a job after closing a startup, right? Let's say, and if we're talking about that, how do you sort of go about shortlisting an ideal role and workplace for yourself? Because how do you even decide where I should work and what would be a good fit for me? That's one part. And second part is representing yourself in an interview, right? And this is more about how do you highlight your entrepreneurial experience in the best way possible to show that you are capable of sort of handling anything right now. So let's start with talking about shortlisting roles and workplaces.
Yeah, I mean, first part, Pawan, is that it is extremely difficult to go back to a job after you have done something of your own, simply because you're so used to making your own calls, right? It becomes extremely difficult. So I think every one of us realizes that. And you know what? Before we get into that, Pawan, on this whole part of what if I may fail, what happens then? I think we all understand that startup is a leap of faith. You're letting go a lot of things to get into this, right? So it is a huge leap of faith. Where the problem comes is when people take this leap for the wrong reasons. If it is for making money as the sole reason, yeah, all of us want to make money, right? I mean, everyone is lying if he says that money doesn't matter. All of us want to make money, but if that is the prime reason why I want to do a startup, if my prime reason is to raise capital and be a startup or an entrepreneur, I think when you get into this, Pawan, for the wrong reasons, that's when you have this self-doubt creeping in that what if it doesn't work? For a lot of people like us, and a lot of, I mean, so millions and millions, where we get into it because we feel that that is the right career choice for us. So there's this funny part of it, when people say that, I quit my job offering me X crore a year to get into this. I would say you did a very good thing. It's not, you'd let go of something very small in order to do something pretty big. So it's not a compromise that you've done, So when you get into this for the right reasons, Pawan, when you get into it because you believe that you can make a change, and trust me, we all do that. It's not rhetorical. It's not just fluff that people speak about, entrepreneurs speak about, but we are really into it because we feel that we can make a difference, and in that process, yeah, we get rich, we create value and so on, but we can make a difference. When you're into it for those reasons, there is very little space or room for self-doubt or for the fact that what if I may fail? Even if you ask yourself, what if I may fail? I think the simple response we give ourselves is, tab dekha jayega yaar, jo hoga. But I'm going to do this. We are so headstrong into it. So I think the reasons why you're getting into it matters a lot on how you perceive or how you believe in it's, the whole thing. So that's something I wanted to share. So now coming back to the question is that, once you have looking at, okay, for some reasons you want to get back into a job and so on. I think, it depends really, Pawan, on the stage that you have quit your previous venture and what we're doing and so on and so forth. But I think anything which offers you a creative freedom, offers you that liberty to take your own calls, that creativity at workplace, those are the kind of the things I believe. I have never done that, Pawan, so I may be wrong, but I believe that those are the kind of things that will work well with your entrepreneurial spirit or what really is within you. You want that power in your hand to make decisions, to be in that position where you can take calls, to be creative with it. Whether it is heading a division, whether it is heading a team, or whether it is starting up something new segment within that particular company, doesn't matter. But I think that creative liberty should be there. If you're looking to take a job there, I think that's something that I would personally look for. Whether it is a startup or an established company, doesn't matter. But if they're offering you a role which kind of borders on this, that might possibly work, right? And when it comes to the typical interview part of it, job interview, how do you position yourself? Look, as you know, you can always talk about the hard skills you have learned in an entrepreneurship in terms of the financials, the pitch deck preparations, the valuations, and so on, which everybody does. I don't think that's something that you should really bring forth. I think in an interview, what it really should look at, focus on, is on the softer side of things, because entrepreneurship changes you as a person. Right from making you extremely thick-skinned, where you are no longer afraid of taking criticisms. You believe that every feedback is a good feedback. You believe that there are times when you need to follow your instincts. You have started trusting your instincts. And if you have run your startup for fairly some long time, you also know the role of processes in going about things. I think a lot of times we beat the larger companies for spending too much time on processes and this and that. But I think if you have run your startup or a venture for some period of time, you know how critical those processes are, right from your HR to hiring to leave policies, everything, to even documenting or reporting and so on. So I think, you become a process oriented, you become a detail oriented person. You no longer jump into conclusions and saying, look, if this is the problem, this is the solution. It doesn't happen that way. Because what happens when you're running your own venture, Pawan, you realize that no problems come in silos. No problem is a marketing problem or a sales problem or a product problem. Everything is coupled. You kind of twist the knob at some point, everything else changes. You decide to spend more on marketing, your budget maybe for hiring the next product guy would be less. So it gets impacted there. So everything is interlinked. So even in a larger organization, I think in an interviews and stuff, you need to bring forth that look, you don't look at problems now in black and white. You know the impact one change is going to create, the wave that is going to create in the rest of the things. So any decision that you're taking becomes more holistic. This becomes more inclusive. That, how do you bring all the stakeholders and then decide what to do? So I think I would personally speak more on those lines, or like to hear from people more on those lines rather than the hard skills to koi bhi seekh jata hai.
Yeah. Perfect. Yeah, I think that you very nicely put about the learnings that you get. We'll do a final couple of questions towards the end, and I'm going to leave that for like the final few minutes. But before that, one thing we really wanted to ask is about the content that you put out, right? And you have built up quite a good following on LinkedIn as well. And even our team follows your very crisp writing, I must say, and we're fans of it. So these days, and I think you touched upon brand a couple of times in some of the previous questions about how a founder becomes the face of a brand in a lot of ways, especially today where people want a trusted face to sort of look at if they're going to use a particular service or a product. So how do you look at founders in two aspects? One is founders becoming the face of the startup with respect to the kind of content they're putting out and the kind of image they're building for themselves. And the second thing is the more human side of things, where you're just staying natural and expressing what you believe as individuals, right? And keeping that away from startups. So what is like that balance between these two things when you're putting yourself out there as a founder?
Sure. So I think probably if you look at some of my posts, whether it's Twitter, LinkedIn, wherever, I think the second part of it, the later part of it, is something that I would put my money on, is that I speak, it comes from within. It is who I am. I like to be fun. I like to be social. I hate being serious. Look, as an entrepreneur, there are so many things you're dealing with, right? The last thing you need to be serious on social media. You need to let go of it somewhere. So I like to be fun. I like to put what I believe in. And then definitely, that's what comes out. That's the image that I project, that I look. I'm not a serious guy. I take a fun side of things. And that's how I look at everything. When I come across any piece of news, I look at it from a fun side of it and saying, hey, that's funny. It could happen this way. In terms of the brand, it's not so much what I speak about the brand, Pawan, but so much that I don't speak about. That portrays the brand in the sense that I don't ridicule anyone. I don't ridicule a particular founder or a company because I know how difficult it is. If a company is doing massive losses and so on and so forth. I think the other day I was putting something up for I forgot one of the companies where they have made massive losses. But my point wasn't about the loss the company made per se, but it was how difficult that industry is. I think it's something in the edtech space. So
I don't belittle somebody's effort, Pawan, because we are all in this space. We're all trying to make money, to make profit, to create value. Nobody's making losses for fun.
Yeah.
So I stay away from that. I stay away from abusing anybody or being abusive. Nothing is here. So I think the good point, Pawan, is that it is what I don't speak that creates a brand for HooLiv, rather than going ahead and speaking about HooLiv or what we are, who we are. I don't need to do that. People associate a lot of even investors, new investors when I meet, they will be like, oh, Chinmoy, oh, we know you from LinkedIn. We have heard about HooLiv from LinkedIn. And that's all there is to it, Pawan. Right? So I speak what I want to, and my brand is what I do speak.
Perfect. Yeah, that's a great. That's a great phrase. Great way to sort of sum it up as well. So yeah, that's brilliant. Okay, final couple of questions I think before we close. And the next one is something that we really like asking everyone who comes in the podcast, right? Which is, what has been the role of dialogue-based education in your life? Probably those perspectives that you got from anyone around you, and conversations and those experiences that you had, like at the most random of times sometimes, that really change the way you think about like both your career from a personal point of view and a professional point of view. And in two ways, right? One is, how did it help you set a more realistic inspiration for yourself when it comes to achieving things? And on the other, how did it help you create better mental models and thinking frameworks for yourself by having these conversations and these dialogues? So yeah.
Yeah, I think in terms of learning, Pawan, yeah, definitely every person that you meet, everyone that you're having a dialogue with, the dialogue that we're having here, I think at this particular stage, there is something to draw upon, something to learn from every interaction that we have. I'll give you a good example. So there was this guy with a meeting, again, in first venture, a billionaire, a telecom giant and so on. We were meeting at his hotel office, and one day we walk in, and he was actually sitting with a few other folks, and those folks were the local tea sellers. They were selling tea in stalls outside of the hotel. So he had called all of them up, and he was sitting and talking. It was a Leela Palace right on the top floor, and like this is the guy, the billionaire, and what is he doing with all this folks? I think that's the first thing that came to mind. So after all of them had left, this guy calls us and we ask him, so what we were doing with all of them here. He said, look, I am getting into an organic, I think it was turmeric-based tea, turmeric tea. And he said, in India, if you're doing business, margin business do not work. Volume business work. And who's going to give me volumes? These local tea sellers and coffee bars. So unless I give them a feeling of confidence that, look, I trust you with my product, you can go ahead and sell it, and I give them a similar kind of status and stature, it's not going to work for me.
Yeah.
That's the reason I called them up. I had tea with them. I gave them a sample and said, just go ahead and sell. The beautiful thing, he kind of compared was that in India, doing business is volume based.
Yeah.
It has to be the good car, the good cars which make money and not the iPhones in India, especially.
Yeah.
Something on those lines. That was one thing. Again, another thing that we have realized over this entire journey, Pawan, is that any real successful people that we have met, right from Dr. Ranjan Pai, who was again one of our investors, to this gentleman I spoke about, the companies from JM Financial, so on, billionaires, right? But one thing we found common in all of them was how humble they were. The level of humility they had. We met this billionaire in Mumbai, and he was running 10-15 minutes late. So we had to wait in his office. I think once he got in, the first 15-20 minutes he just spent in apologizing, which he had no business of doing. And he gave us, he got us tea and this and that, and so apologetic. But the point is, they're all so humble. So I often try to think whether it is the journey which has made them so humble, the kind of things, that roadblocks they had to overcome and so on, so that every roadblock imbibed in that humility, or they had reached that position where they are so successful because they are so humble, because they're so empathetic. I do not know what's the thing, but that's the common trait among all of them. And that's a big, big learning for us, Pawan, is that no matter stay humble, stay grounded. And whether it is the person who's serving you tea in your office, to somebody, that reminds me of another beautiful thing. So when I was quitting my previous organization, right, the one that I gave an example of, so we were looking at someone to replace me. I think there's a gentleman from, I am Bangalore, if I remember correctly. So he walks in, had a great meeting, everything, and then he leaves. And then my founder, the CEO, he asked me, so Chinmoy, what do you think? I said, I think it's a very good guy. He said, no, I'm not going to hire him. I said, why? What happened?
He said when he was walking out, the guard stopped him and said, "Sir, you have to sign out." And he said, "No, I don't believe in such things." So actually, he didn't hire that person.
Wow.
That's why he has built what he has built. And so these kind of things, Pawan, always remain with you. They leave an indelible mark on you that look, wherever you are, never lose this ears to the ground, this humility. Those are some very, very key learnings from me. Again, when I speak more about this because when it comes to hard skills, when it comes to doing evaluation, DCF, millions of courses, you go to YouTube and learn it in a day. But these are soft factors, which end of the day makes a lot of difference. Your team relies on you for every salary. What is the message that you're communicating and what is the trust you're building? I think those goes a long way in building a successful venture than just the financials and the fundraising. So I don't know, maybe I deviated from the question that you asked. But
No, it's brilliant. I think these are exactly the kind of insights or stories that we like hearing about when you ask this question as well. Okay, final question to conclude. I think last 1 minute we have as well, which is if you had to go back to your college days and do something differently, what would that be? And in two different contexts. One is if you could go back to your first year of college, what would you change? And if you go back to your final year of college, what would you change?
I think the first year I was I think really an introverted person, and it was not only when I joined the workforce or maybe when I went out, I think it got the extrovert in me out, but I've been really, really introverted. And possibly if I have to go back and change one thing, I would be more outgoing, I think try to build a network. I think that's become a sacrosanct now, that you start building this network right from day one. So I think I would just try putting in more effort in that, building a bigger community and network, being more outgoing. That's the one thing that I would do if I'm in the first year. And if I'm in the final year, I'll just jump into the startup entrepreneurship world right away. And no longer take up a job or anything or higher studies, nothing. Get into the world of entrepreneurship because it is such an addiction. Where you're living every day, you are fulfilling your dreams. So it's beautiful. So I jump right into it.
Perfect. Yeah. Beautiful. I think great note to sort of end the podcast as well. So, Chinmoy, thank you so much for doing this with us. I think supremely insightful. I think not just for our listeners later on, but for me also personally, doing this, asking these questions and picking your brain. So, yeah, I mean, it's a great honor to have you here and so much for agreeing to do this with us.
Thank you, Pawan. It's been a pleasure speaking with you and good luck to you and the team. And I look forward to more such podcasts from you.
Yes. Yeah. Thank you so much.